Let me ask you something. If crypto is such a huge opportunity, why are so many beginners still losing money? It's not because crypto doesn't work. It's because most people jump in with zero strategy. I've seen it happen over and over again. A friend hears about Bitcoin at a barbecue, opens an app that night, throws in a few $1,000s, and spends the next week glued to charts. When the market dips, panic sets in. When it pumps, greed kicks in. No plan. Just emotion. Today, I'm going to walk you through beginner-friendly, innovative strategies that regular Americans are using to grow their crypto wealth without gambling, without stressing 24/7s, and without trying to become day traders. And strategy number 4. That's the one most beginners completely ignore, and it's costing them big time. Quick reality check. If you're waiting to buy the perfect dip, you'll probably miss it. Even professional traders can't consistently time the market. I once spoke to a beginner investor who waited months for Bitcoin to drop just a little more. It never hit his target. He ended up buying higher than where he first discovered it. Instead of guessing, beginners should use something called dollar cost averaging. You invest a fixed amount every week or every month, no matter what the price is. If Bitcoin drops, you buy. If it rises, you buy. If it moves sideways, you buy. This removes emotion. No ife, o eme, o no panic. Over time, this strategy smooths out volatility. But here's what most people mess up. They stop when the market gets scary. The real power of DCA works when you stay consistent during fear. Be honest. Have you ever bought a coin because someone on YouTube said it would 100x? Most beginners have. I've seen people load up on random altcoins with cool logos and big promises, only to watch them disappear months later. Instead of chasing hype coins, structure your portfolio with intention. A strong foundation, a growth layer, a small experimental portion. Think 60% foundation, 30% growth, 10% experimental. That way, if your risky plays fail, you're not wiped out. You're building a system, not buying lottery tickets. Now here's something most beginners don't realize. Owning crypto is just step 1. The real money move is making it work for you. Most beginners just let crypto sit in an exchange. That's like keeping cash under your mattress. Instead, you can earn passive rewards through staking, certain yield platforms, and regulated crypto savings options. But pause for a second. If someone promises 30%, 40%, or 50% guaranteed returns, that's not investing. That's a red flag. I've watched platforms collapse because people chased unrealistic yields. Stick to realistic returns. Slow and steady wealth beats overnight disasters. Now let's talk about the mistake that wipes out most beginners. Not taking profits. You don't actually make money when your portfolio goes up. You make money when you sell. I once knew someone who watched a small investment turn into 5 times its value. He didn't sell a single dollar because he thought it would go higher. Months later, it crashed back down near his original entry. If your investment doubles, consider pulling out your original investment. That way you've reduced risk, you're playing with house money, and you sleep better at night. Beginners get greedy. Smart investors get strategic. Selling isn't about timing the exact top. It is about having a plan before emotions take over. Crypto moves in waves. Hype. Excitement. Everyone talking about it. Then crash. Silence. Fear. The real opportunity is usually in the boring phase, when nobody cares, when media stops covering it. When your friends say crypto is dead, that's usually when smart money accumulates. Beginners buy hype. Wealth builders buy fear. It feels uncomfortable, but that discomfort is often where opportunity lives. But even the best strategy fails if you ignore one critical rule. Protection. If you lose access to your crypto, it's gone. No customer support hotline can reverse blockchain transactions. I've heard too many stories of people losing funds because they clicked a phishing link or stored passwords carelessly. Use strong passwords. Turn on two-factor authentication. Consider hardware wallets for larger amounts. Never share seed phrases. Ever. Growing wealth is step 2. Protecting wealth is step 1. And finally, think long-term. Crypto is volatile in the short term. Prices swing wildly. Headlines exaggerate. Social media overreacts. But zoom out. Innovation takes time. Adoption takes time. Technology matures over years. If your mindset is, can this make me rich next month? You'll probably lose. If your mindset is, where could this ecosystem be in 5 years? Now you're investing. Historically, the biggest crypto gains went to people who held through noise, not people refreshing charts every 10 minutes. So here's the bottom line. To grow your crypto wealth as a beginner, use dollar cost averaging. Structure your portfolio properly. Earn passive rewards safely. Take profits strategically. Buy during fear, not hype. Secure your assets. Think long-term. Crypto isn't a lottery ticket. It's a high-volatility asset class that rewards discipline. If you're serious about building wealth, instead of chasing hype, start acting like an investor, not a gambler. And ask yourself honestly, are you investing with a plan or just hoping for luck?